have been doing is really expanding their offshore operations, which just leads to, I guess you could say, a bit of a rand hedge for local JSE investors. So, and the sports betting industry in South Africa is massively booming at the moment. We've seen the likes of a very common one is Betway. And
hi everyone, welcome back to another FinMeUp video. Today we'll be looking at 5 JSE stock picks. So we are here with Neal, a performance analyst, and he's got a big passion and knowledge about investing as well. So we'll be looking at his top 5 picks for 2023. Neal, welcome. It's great to have you here and keen to get your insights on your companies.
Yeah, thanks so much for having me, Hugo. I've been a keen follower of FinMeUp for the last year and a half. I think you guys are doing some fantastic work. So excited to share what I have, my knowledge on the 5 stocks that I've selected for today, and just always keen to just hear about others' thoughts and opinions of this thing that we like to, or we try to understand, called the market.
Awesome. So everyone listening, we're going to cover these 5 stocks. We're going to get some insights. If you have any questions, feel free to post them in the comments. Other mentors have been posting their top picks for the year on the FinMeUp app, so you can go check that out. We'll also be doing more interviews with the mentors and their stock picks, so make sure you subscribe. So let's get into it. Origent, this is actually a company I like as well. I know the PE is below 5. They've given a good outlook for the rest of the year. So tell us why Origent.
Yeah, so for a couple of reasons. For me, I always first glance sort of where they're trading at, what sort of price to earnings they're trading at. Have they recently paid a dividend? But I think that a lot of investors can get quite caught up in just looking at such an easy metric such as a price to earnings multiple. I like to dig a bit deeper into the financials. For me, a big one is the NAV. So I just see that for the last 5 years, the management has consistently grown the net asset value of the company from about, I think it was about 14 Rand in 2018 up to a NAV of about 24 Rand to this day, or just probably slightly under. Represents quite a healthy discount to the underlying share price at the moment. And for me, that just signals that management just have the opportunity to buy back shares when the prevailing share price is less than what the business is worth. And management have been doing that. So it's nice to align both shareholders' interests and management with there. And the second take that I do have on Argent and why I do like it is, although they don't have direct interests in China has a big demand for the steel production, and Argent have some interests over in steel. So I think that it could be an indirect beneficiary, with what we've seen as the talks of China reopening. We've seen how that's affected sort of the direct exposure stocks in the JSE, such as the Richemonts and the Naspers. But I think that Argent could be one to stand to benefit there. And another thing that they have been doing is really expanding their offshore operations, which just leads to, I guess you could say, a bit of a rand hedge for local JSE investors. So a couple of reasons why I like it, and yeah, I just think it's trading at a seriously undemanding multiple with quite a nice margin of safety. So it gets the nod from me.
Yeah, and with Argent, they're also doing buybacks. They have been doing buybacks, and I'm a big fan when a company does buybacks, especially when they are undervalued. They are also paying dividends. There is a discount to NAV and the reasons you mentioned. So yeah, definitely a company to watch. Then a second company that's on part of your top 5 picks for the year is Mondi. Please tell us more about Mondi.
Yeah, so Mondi's an interesting business. I suppose you could branch it in what we refer to as unsexy businesses. But I think that there's a lot to be said about those, and especially in the times that we find ourselves in, sort of businesses which are earning cash now and reaping the rewards now, rather than paying for earnings at a future date. So a couple of reasons why I think that Mondi is a fantastic addition to any portfolio is this isn't the biggest reason for me, but I think it's an important one to note, is it's in the top 40. So whenever the top 40 catches some bids on the right side of the market or falls into favorable hands globally, Mondi will tend to catch a bid there. So you're getting what investors refer to as beta there. So I think that's important. If ever you want to outperform the index, is to hold companies like that, which are trading at undemanding multiples and prices, in order to capture any sort of upside from the general market movements. The second reason is that I do like it is that, so Mondi had about 20% of its operating profits with exposure to Russia. They had one of the largest mills in Russia. That's been written down to zero. They have put it up for sale, and they've attracted one or two bids. So for me, if that deal does go through, it's seriously attractive for shareholders, in the sense that all that cash can be either used to buy back shares if management deem it appropriate, or ultimately pay it out either in prolonged dividends, in sort of expansion, or in the special dividend back to shareholders. And then just a metric that I like to use when I look at a company like Mondi is the ROCE, so that's return on capital employed. That's been growing steadily at about 20% over the last, I think it's about 12 years. So that pretty much dictates the return that management have been able to deliver on the equity and debt that they have invested into the business. So although it's a difficult business, the paper business, it's very well integrated. They own all legs of the supply chain. So I just think it's currently trading at a fantastic price. It's almost trading at a you could say an emerging market multiple at about 7 times earnings. When for me, this any re-rating could see Mondi fall back into favor in the market.
Sure, that's a proper metric. The return on employed capital, 20% is proper. Then you're putting some chips on a gambling business. Maybe it's not just a gambling business. Tsogo-san Gaming. Please tell us more about your pick on that.
Yeah, so this, I guess you could say, is a bit of a left field call for me, a bit of a surprise package. But if you want to make 5 bold calls for the year, you have to include a couple of surprises in the mix there. So so Togo-san gets the nod for me for a number of reasons. First of all, I think management did an astounding job in navigating it through the COVID period. This is a business which earnings is diversified through entertainment, casino, and sports betting, and hotels. However, all 3 of those metrics were cut off completely during COVID. So it wasn't a case that they could leverage off other opportunities. It's a case of one day they were earning money, the next day they weren't. I think that management did a great job in one, accumulating a manageable level of debt in order to pay that down in the years to come, and 2, keeping the businesses afloat, and 3, making enhancements. So an enhancement that I see that's come to market is that they've recently launched in December 2022 an online sportsbook called Play It Sogo, and the sports betting industry in South Africa is massively booming at the moment. We've seen the likes of a very common one is Betway, and then being headline sponsors of a lot of sports events. So there's just massive markets and opportunity to do that. So I just think that Togo-san, especially a very reputable company, have sort of the platform and the distribution network in order to push those income streams through. So I think that they've taken a lot of short-term pain, and that's reflecting sort of in the price at the moment. Trading, once again, I think it's a fantastic entry point. 7 times earnings on depressed earnings. If they're trading at 7 times earnings in bad times, I think that there's a lot of legroom to wiggle that way up. Once sort of they start reaping the renewed income streams there, and they've also been managing to pay out a slight dividend, and that's impressive, especially with paying down some debt. So it just shows that management have done a sterling job, very much aligned with shareholders. So I do think that's a fantastic pick to add to a portfolio. Okay,
awesome. Thanks for that. So 2 more to go. The second last one, and this one I don't know anything about, so very keen to learn about this one. South 32. Please tell us more about that.
Yeah, so this was a toss-up between South 32 and Sibanye to add into my top 5 picks. I just thought Sibanye was just too vanilla for me. I think it's in most people's picks this year. I do back Sibanye. I think it's got good legroom. I also like their exposure to gold. 10% of Sibanye's revenue stream is from gold. But South 32 is a very interesting one. So it was unbundled from BHP Billiton in, I think it was in 2015. So they got a very diversified metals base situated over in Perth in Australia. So it's a bit of a gift that we get it listed on the JSE. One of those companies which does have foreign earnings which you can capture directly with sort of in rand denominated investments. Most of their revenue gets generated in Australia, with interests in South America and in Australia. So it's a bit of a mouthful what metals they do, but it's quite a few. So they've got interests in copper, silver, which I'm quite bullish on this year. I think that silver's trading at a bottom of a nice range, so I expect a bit of a bounce for silver. So they also do lead and nickel. So a lot of those have quite strong uses. especially in the way that the fourth industrial revolution is going, the move to electric vehicles, the fact that a lot of those are fantastic conductors of electricity and will always be used for various electronic parts. And so a couple of things which sprung me onto South32 is one, when especially when a company gets unbundled, there's often an initial bit of pain, but then sort of the market wakes up to the opportunity. So I think that's come to the fore with South32 a bit. It's lagged a lot of the commodity counters in the index, so it hasn't caught the bids of the big producers out there. And then lastly, also backed by a great management team. They've had the backing of BHP Billiton. They're still adding the input there. So I just think that it's a good counter to look at. It's had a strong start to the year, but I still see some good upside, and I'm putting a price target of 68 rand on the share.
You mentioned that they also produce copper, and I know there's quite a few people that's bullish on copper. I actually asked on my Twitter the other day which JSE companies produce copper, so I'm definitely going to look more into this one. Thanks for that. Before we get into the last one, thanks for everyone watching. If you want more stock picks, you can go check on the FinMeUp app. There's also the daily quizzes you can play. There's so many cool features. Just go check it out. But not to waste any more time, let's get into your final pick. This was actually one of our stock picks last year during the year and did quite well. Mustek. Please tell us more about Mustek and your insights.
Yeah, so Mustek's I actually think it's a bit of a complicated business. At sort of face value, it looks like it's just a simple ICT business, but they've got a couple of arms to it. So one, they do the software and cloud computing within the ICT business does do. Next, they also set up and maintain various network infrastructure. So that can be anything from sort of setting up a business with new laptops for the employees, working on the whole distribution line for that. And then lastly, they also run the security systems for various businesses, and also they are involved in setting up training for companies in order to get the employees up to scratch. So a couple of reasons why I do like Mustek, and I guess it's similar to the Santova argument, is that they are a capital light business, so they are involved in rather the distribution angle of it. So a lot of I suppose you could say their assets are intangible in the sense that they consist of probably physical assets and employees and intellectual capital and all of that. So in a rising interest rate environment that we currently see now, they don't necessarily bear the brunt of that. However, sort of a risk that I would mention to Mustek is sort of the slowdown of businesses as they look to expand. Maybe the hiring rate slows down, so there could be slightly less demand for various the networks that they would supply. But then another bullish thesis that I do have on Mustek is that they are a seller and distributor of inverters, and we've seen that the demand that inverters have taken to the market there. So I think that there's an ideal opportunity for Mustek to spring on to ramp up the inverter sales more so than they've already done, and ultimately capitalize on this. So what we do know is that load shedding isn't going away for any time in the future. I think that it will come down at some point, but I think it's going to be here for us to stay for a while. So I just think Mustek trading at, once again, very undemanding multiple at about 4 times earnings with a bit of a dividend yield, net asset value of 23 Rand a share, and also grown its net asset value over the last 5 years. And the share price does tend to track the net asset value. So I think it's an ideal opportunity for management either to buy back shares at a lower price, for management to buy out minorities, or just stay the course, and you know that you're holding a good quality business at a great price.
Very interesting. Thanks so much, Neal. Appreciate all the insights, and definitely gonna watch these companies as the year goes by. One of your picks was also one of my top 5 picks for the year, which was Argent, and also gave my reasoning and research there on my picks. We're going to introduce more picks soon to the community, also interview more mentors. Stay tuned. Neal, thanks so much for being with us. It was great learning from you.
Thanks so much, Hugo, and good luck to all the investors out there. Stay the journey.